What's going on, everyone? Today I'm going to show you the best indicator that you can use. That indicator is called the MACD. I'm going to show you exactly how you can use it and how it helps you in your trading. If you don't already use it, each and every single one of you should at least have it. All right, we're going to get right into it. I'm going to show you exactly what I mean. Okay, so we're here on USD CAD, USD CAD, and I'm going to show you exactly what the MACD is good for. So if you want to add this, just go to indicators, type in MACD. I use this one here called the moving average convergence divergence. If I go to settings here, I took off the lines by just clicking these and I make the colors the same. So the MACD can be really good because, especially the way I trade and the way a lot of people do trade, is we try to look for highs and lows in the market. And sometimes you can get faked out and mark out the wrong highs and lows. So for example, if we just take a look in this section here, if you were to try to mark out all the highs and lows, or all the highs, for example, would you just mark out all this stuff here? Okay, there's a high, there's a high, there's a high. Okay, some people might even think this is a high down here, right? So these could all be perfectly good highs. And if we turn the MACD on, as we can see, we rate away these two highs here are not even highs. And a lot of the time I will see people send me trades and I will go and look at them and they will mark out the wrong highs because they're not using an MACD. So for example, these first two highs, you might think they're a valid high, but they're not, because on MACD, if we mark from the right of this low here to the left of this low here, everything in this section is considered a low, like by momentum. So this whole section actually created a low right here. All right, because we take the lowest part of this section. That was a new low. As you can see, price broke below and then came up back up towards it. So nothing in this section could be considered a high because on the MACD, we are actually making a swing low. So this is a really important indicator that will help you determine proper highs and lows. Now I'll show you where it actually comes in handy. So if we let this play out here, we're just going to remove all our drawings for a second. So let's say we were to mark from here, this low, to this low here, right? A lot of you might think that the very top of this wick is actually a high, right? And then a lot of you might be waiting for that high to get broken, right? So if we let it play out, as we can see, price breaks this high here. So then a lot of you might, try to enter after it pulls back a little bit, put your targets above, right? And then boom, straight down into your stop loss. See, I get a lot of trades like this. A lot of people will send me trades and ask why they didn't work out. Well, most of the time, you're not actually validating your highs and lows. So yeah, tip number one for using the MACD, it determines valid highs and lows. So this is something really important that the MACD is really good at doing. So we're going to move on and we're going to show you a quick example of how to actually use proper highs and lows. Before we do that, if you guys are looking for a broker or a good broker to use, I highly recommend Hanko Trade. They offer up to 500 leverage with spreads as low as 0 pips. They're really quick and easy to sign up with, and you can deposit your money pretty fast. You can also open an account with as little as $10. If you guys want to sign up with Hanko Trade, use my link down below. That being said, let's get back to the video. Okay, so now how to actually use a proper valid high or low to trade a reversal. That's what I like to do. So if I let the trade play out, I will mark out proper highs and lows. For example, right between here, we have this high push, right? Because we have a green momentum. This is making a new high. So we mark out the highest part of this green momentum, which would be this candlestick right here, and you mark the highest part. Okay, so now that we've determined this here is actually a valid high, we can let the trade actually play out. So if we let it play out, see what happens. Okay, here. As you can see, price then comes up and actually breaks above our valid high. Now this is our signal to know that price is starting to reverse. Okay, cool. So we see that, price has broken above our valid high, and we have this nice impulse down and then it impulse up. This tells me that price could not hold down in this lower zone, and price and a bunch of buyers actually took over, so the momentum started to head back up. So now we can look to enter in some liquidity, like down here, for example. We have these wicks down here. we have a bunch of consolidation going on here. This will be a good place to enter. Have a nice little stop loss. I like to use a stop loss anything higher than 10 pips now. I find my win rate is a lot higher because sometimes price can fluctuate within that 10 pip range. And then when determining a place to take profit, I like to look to the recent highs before that. So this is a recent valid there. We have a recent valid high there. And I think I'm going to pick out this zone here because price has extended so far down. We have a lot of bullish momentum coming in, so I think price can reach up to the top there. So we're going to go for a trade like this. If we let this trade play out, as you can see, price comes back into our liquidity, taps right into my entry, and then as you can see, this was another high here, but you see how price just goes straight through that. So we know that price has a lot of bullish momentum. It's going to keep going further, so we can feel pretty confident that it should come up to our high, and like I said, came right up to our high just like that. Taps into our take profit for a nice 4.61 risk to reward ratio. There's a dove on the roof. Hey. So by properly determining valid highs and lows, it can make the whole difference between a winning trade and a losing trade. So a lot of people will actually get stopped out on trades like this and discourage them from trading highs and lows. It can give the wrong impression for traders, thinking that trading off of highs and lows doesn't work as well. You have to make sure you're trading off of the proper highs and lows that are actually validated. Because a lot of buyers will end up getting trapped in here thinking that price is actually breaking a high when it's really not. So try to watch out for that when you're trading. It helps a lot using MACD to determine that. And the second use we're going to talk about really quick, just to sum up the rest of this video, because the main reason I like to use it is actually to determine highs and lows. But another reason is actually to show momentum, right? Like each one of these green pulses shows bullish momentum. Each one of the red ones shows bearish momentum. So something you can look to do if you're not good at figuring out where to enter in liquidity is when price comes back and pulls back and makes this, red, when it starts to turn green again, you can look to enter in those areas. So if we entered on this first green bar here, it would have been right here. And that would have been a pretty good entry into this trade. If we entered on this green bar here, this would have also been a nice little entry to trade too. So it can be really good at determining momentum as well. But yeah, the main reason is to determine highs and lows. That's what I like to use it for. Other than that, thank you for watching the video. Hope you enjoyed it.